Bitcoin is the only asset in the world that's not in a bubble. The US dollar is clearly in a bubble, stocks are in a bubble, bonds are in the most gargantuan historic bubble ever in history. Bitcoin is rising as a reflection of money escaping those bubble assets into Bitcoin because it's the only true asset that has actual role and a safe haven as we see all of the 300-year experiment in fiat money collapsing. It's the only thing not in a bubble. In the Ponzi scheme, you're constantly creating more and selling them to the new entrants. XRP and everything else are centralized. Ultimately, you see it's like a balloon. You squeeze one part of it and it pops up in another part of it. Only people who don't understand Bitcoin complain about the volatility. At this point, at a $2 trillion asset valuation, heading to $200 trillion asset valuation, if it were dumped on the market, it would have a minimal impact.
Today, as many asset managers are predicting Bitcoin to hit new all-time highs by mid-2026, Max Keiser has issued a warning to all crypto and Bitcoin holders, and the recent crash in prices is only the beginning. Keiser recently appeared on a Twitter Spaces countdown and discussed why crypto holders need to be prepared in the months ahead. After a week of significant crypto market downturn and Bitcoin price crash fears continuing, the Bitcoin tsunami that's coming will change crypto forever. And Keiser discusses the inevitable collapse of the fiat money system as we know it, and says there's a plan to take over Bitcoin and crypto. With BlackRock being one of the biggest players to get into the space, this will be the least of our concerns, as entire countries are now coming for Bitcoin, with the current price sitting just under $86,000, still down over 20% in the past month. In this latest interview, Keiser discusses why it's more important than ever that nation-states adopt Bitcoin and incorporate into the global economy before the inevitable collapse of the current monetary system as we know it. Everyone's focused on tariffs, inflation, and the so-called weak dollar, but Max Keiser is seeing something completely different, and it might be the most underreported economic shift of 2025. Behind the scenes, the US just pulled off what could be the biggest corporate tax cut in modern history without even changing the official rate. Through new depreciation rules, companies can now write off almost everything. That drops the effective corporate tax rate to somewhere around 10 to 12%. That means the US just became the lowest taxed major economy on Earth. Let's get right into the latest interview with Max Keiser, as he gives us his prediction for Bitcoin in the coming months, and why a massive surge in capital is about to pour into the space. Drop your comments down below and subscribe if you enjoy the content we do here.
Similar to what Michael Saylor is doing over there at MicroStrategy. So he's buying Bitcoin, putting on the balance sheet that improves his collateral status and ability to float more stock and more bonds to buy more Bitcoin. And then the Bitcoin goes higher, and then he's got more collateral. So he's traded as something of a perpetual motion machine, and he's actually outperforming Bitcoin. And there's no limit really to how far that this can go. They've increased their balance sheet. When they started off, they were worth $2 billion. I think they're worth close to $40 billion now or something like that. So by putting Bitcoin on the reserves of the country, they're improving their collateral base. And so therefore their rating, which is currently below investment grade or junk, interest rates are relatively high. But as they increase their Bitcoin position, the rating will get better and the interest rates will be lower, and they'll be able to borrow more. And with those borrowed funds, they can buy more Bitcoin. Most countries have all their strategic reserves in fiat money, and fiat money is collapsing against Bitcoin. So, because remember, the goal is a speculative attack, and fiat money is the victim. And so, like Michael Saylor, El Salvador is now on the warpath. We're going to take fiat money down. And so they can play all the games that they want, but they're holding fiat money, so they lose before it starts. And it's just fun to watch. There'll be a critical mass of people who have the wherewithal to opt out. So when you have a majority of the population can simply say, no, because I've got unconfiscatable wealth. I have all the wealth I'll ever need because fiat money has crashed. Even my 10 Bitcoin, 5 Bitcoin, even 1 Bitcoin gives me all the wealth I'll need. And I'm simply opting out. I'm not going to pay taxes. I'm not going to vote. I'm not going to do anything you ask me to do at all. I'm not completely opting out. If you have critical mass of people do this, then the institutional abuse that we're all suffering through collapses. But you say this, with the question, you reveal something interesting here. You're saying, oh, I hear the highest concentration of Bitcoin owners is in the United States. But we're heading into a world where borders are becoming superfluous, where the nation state itself is being reinvented and challenged and probably collapsing. So national borders are becoming less of a factor. The Bitcoin community, it's an international community, and it's a very agile and movable center of gravity. It's like, I'm always fascinated by flocks of starlings who they fly in these groups where they're thousands at a time, and they're through the sky in these patterns called murmurations, where it's ebbing and flowing like an ocean. And they don't seem to bump into each other. They seem to all be knowing, like when we watch a drone exhibit of 1,000 drones all working in concert, it's incredible technology, and it took 1,000 years to get there. But these starlings have been doing it for quite a long time. And so this is kind of the Bitcoin community. We're all sovereign unto ourselves, but we can pick and choose who we fly with at any moment. We can fly in this part of the murmuration, that part of the murmuration, or not part of the murmuration. And that murmuration will continue based on the ebbs and flows of Bitcoin mentality and Bitcoin psychology and Bitcoin philosophy, which is all connected electronically anyway. So it's just a matter of going with the flow, literally. And nation state borders will become increasingly meaningless. I mean, in the US, they've given up on their borders anyway. And they've said, we don't really have a border. And they're just allowing really a borderless country to exist. And that's having, pluses and minuses, right? It's putting a tremendous strain on the infrastructure, and then that part of the economy will collapse. But it also will decapitalize and demonetize the ruling elites, who will have nobody to rule over, because they've, as Johnny Cash would say, you can have my pile of dirt. I'm the king of my, pile of dirt, essentially, will be the new national anthem in the United States. Demand shock meets supply shock. So you're going to have those two colliding in a spectacular fireworks of price appreciation. The demand for Bitcoin is already outstripping daily supply by a huge factor, 10 or 20x. That is going to double in another couple of weeks. So the projection is that within 6 months, there won't be any Bitcoin around to buy for ETFs. Not at these prices, and not maybe even at 150 or 200,000. You're going to have to go higher to find any sellers. There's just no sellers. And there will be a time when nobody accepts fiat money at all for Bitcoin. You will not be able to swap your fiat money for Bitcoin. No one will take dollars for Bitcoin. That will be a time that comes soon.
Embracing an unyielding enthusiasm for the crypto realm, Keiser confidently predicts that the next collapse is looming on the horizon, as BlackRock and many other crypto giants are bracing for. Keiser reassures that a long-expected surge awaits, as Bitcoin's price will still rise exponentially in the second half of 2025.
Well, Bitcoin is uniquely decentralized and getting more so. Even though ETFs are not adding to centralization, the underlying node proliferation and et cetera would lead to greater decentralization. Whereas gold is, relative to Bitcoin, very centralized. It is very centralized. And on the bullion banks, or who owns the most stockpiles of gold, and where gold is mined. So it's compared to Bitcoin, it's very centralized. So it's a lot easier to manipulate, a lot easier to control. But Bitcoin is truly decentralized. And so it's out of anyone's reach, any group of folks, to control it. They can temporarily throw a roadblock in front of it. But like I've also said for many years, that Bitcoin was designed to be attacked, because if you attack it, it just means that the miners and the people throwing computational power at it, their dedication to it goes up, which increases security and therefore increases price. It's designed to be attacked. The more you attack it, the higher the price goes anyway. So it's just it's going to be. What I was going to say is that the speculative attack is really just now coming into people's consciousness. So George Soros did this back in the early 90s against the Bank of England. He's borrowing money from the Bank of England to attack the Bank of England. And he broke the Bank of England, and he made $1 billion in a week. and it was considered a fantastic financial play. But this is what Michael Saylor is doing right now. He's borrowing at less than 1%, buying Bitcoin that's compounding at 70% a year, right? So you're borrowing at under 1% to buy something that's compounding at 70% a year, and you can keep doing it. There's nothing stopping him just because the collateral value keeps going up. And he can dilute his shareholders forever. No one's going to stop him from diluting the shares because he's buying Bitcoin with the new money. It makes the shares that they have, even though it's less of a percentage ownership of that company, the value of those shares are going exponentially higher. So you may have had 10% of MicroStrategy worth $1 million, but now you've got 1% of MicroStrategy, but it's worth 20 million because he owns that much more Bitcoin. And now I own 1/10 of 1%, and it's worth 40 million because Bitcoin keeps going up and he keeps collateral. That's the speculative attack. That's what happens. So now El Salvador, I would posit, is doing something similar. And so other companies, other countries are going to be catching on to this, the playbook of MicroStrategy, that as long as you can borrow money and as long as there's fiat money taken for Bitcoin, you can engage in this perpetual motion money machine. And another thing I like to say is Bitcoin has no top because fiat money has no bottom. Priced in fiat money, Bitcoin goes to infinity because all fiat money will be worthless against Bitcoin. Priced in gold, Bitcoin will continue to do very well against gold, but it'll never go to infinity against gold. Gold will always be worth something. Someone will use it as a doorstop or something. Like it'll have some use, whereas fiat money has no use at all. It's just paper. Or, other commodities, certainly against Bitcoin, property markets, you'd be like, I'll buy the island of Manhattan, was sold, it was bought, the legend has it for like $59.
Right.
That we're going to head back to that. We're heading back to that. It'll be, you can buy the island of Manhattan for the equivalent, of 1 Bitcoin at some point, 59 Bitcoins, because it'll be that much higher and no one will want, look, commercial real estate's already collapsing all over the world in the US. And a lot of that, I would say, has to do with it being demonetized by Bitcoin. As an investment, as a store of value, is being undermined or demonetized by Bitcoin. So you see people selling their gold ETFs, they're buying Bitcoin ETFs. They're going to be selling their REITs, the real estate investment trusts. They'll be buying Bitcoin. They're going to sell their S&P 500 ETFs, the SPX. They'll be selling those and buying Bitcoin ETFs. So there's a huge changing of the guard, and the money is flowing into Bitcoin. And so this is all. And so the halving. I know what I was going to say. The halving is one of many metrics that one can look at and extrapolate from and draw a conclusion. I would say, for me, I look at sentiment. So right now, the sentiment toward Bitcoin is still fairly lukewarm, as opposed to, let's say, 2017, where every magazine in the world had a cover story about insta-billionaires on crypto and Bitcoin. And we're not anywhere near that level of mania yet. When you see stories on ABC, CBS, NBC about this homeless man sold his last, stick of firewood to buy Bitcoin, like those kinds of wacky stories. And so sentiment is at that extreme. That will be hitting a cycle peak. The sentiment will be very high, right? But we're not even halfway there yet. We're in the second or third inning of sentiment getting stretched to the point where, those crazy stories, this mother of 3 got her 12, sold her baby, buy more Bitcoin or something, that'll be the story. It'll be shocking, but it'll be the height of the, P. Diddy gave up his various habits
for Bitcoin. P. Diddy. Well, that'd be awesome.
Yeah. Bitcoin fixes it,
So this is interesting, though, that when the day comes when fiat, people aren't going to be able to use fiat to buy Bitcoin, then you think we'll just go to, I'll sell you my house for 2 Bitcoin or whatever. We're just going to go to that.
It's hyper-Bitcoinization. So everything's in Bitcoin. Everything is priced in Bitcoin, and it's a medium of exchange and a store of value. So you get paid in Bitcoin. You go to the supermarket, it's all priced in Bitcoin. Everything's in Bitcoin, hyper-Bitcoinization. Whereas El Salvador is kind of like heading in that direction as well, right? So it's becoming a circular economy, they call it in El Zonte. It's a circular economy. People are paid in Bitcoin, we use Bitcoin, we store our wealth in Bitcoin. So that will gravitate out.
The Bank of Japan, historically central to global currency dynamics, is on the brink of default, which could precipitate a global economic downturn. Max foresees a looming economic catastrophe driven by collapsing fiat money systems, rampant inflation, and bank failures. He suggests that a transition to a Bitcoin standard might be on the horizon as the world grapples with the impending crisis. He asserts that the promises made by the Federal Reserve and central banks have been hollow, leading to excessive money printing and a proliferation of poor investments. And with the aftermath of the recent inflation surge, Keiser says this will not lead to a return to the status quo. He argues that the economy has spun out of control, with the US facing a mounting debt crisis. Keiser presents two bleak possibilities: hyperinflation or a deflationary depression. In either scenario, the overall quality of life deteriorates. He notes the absence of viable solutions, indicating an even greater severity of the crisis. Interestingly, he points out how political figures are discussing Bitcoin as part of a potential solution, marking a shift towards a Bitcoin-centric financial framework. What do you think about the latest interview with Max Keiser? And what are your thoughts on his prediction for Bitcoin? Drop your comments down below and subscribe if you enjoy the content we do here.